Hi, welcome back to Does My Bank Still Love Me? I'm Jackie Benster, and I'm sitting here today with Rachel Rensvold of Sound Method Modifications in Seattle, Washington. Rachel is the Director of Business Development and a licensed loan officer. And Rachel, welcome.
Hello.
It's nice to see you again.
You too.
You were on our program once before.
That's right.
All right. And we had you back because we think you're wonderful.
Thank you.
And I wanted to ask you, just to start off the top of the program, what the blazes is a licensed loan officer, and how do you get to be a licensed loan officer?
Sure. So there's state and national licensing requirements, basically for a new person who has not been licensed previously. I believe that there's a 40-hour class that you need to take. You need to pass that class with a certain percentage. So you need to make sure that you understand all the state and federal regulation, all the RESPA laws, all the consumer protection laws.
I'm sorry, what's RESPA?
Real Estate Servicing Protection Act.
Okay,
so
very good.
It's an enforcement that's put in place to protect consumers, and you need to be able to understand that and explain what that means to your clients, and also be able to follow the regulations. Additionally, you have to take a federal test and a state level test.
Oh my.
And at that point in time, that you'll be, well, there's some additional requirements as well. You have to also, they check your credit, they check your criminal background, they make sure that you've never had any fraudulent or theft charges. There's a fingerprinting process that you go through, so they check you in all the criminal databases as well. And if you pass all of that, including the testing, and the state feels that you're qualified, you can become a licensed loan officer.
All right. Well, that kind of makes me feel like I would be in good hands if I were, facing some stressful situations.
Yeah.
And then you also work with a mortgage broker, is that correct?
Uh-huh.
Okay. And how long have you been doing this now?
Oh gosh, I've been doing it since 2002.
So eight and a half years,
Correct.
something like that.
Yep.
Around
Yep.
8. Well,
Yep.
that's great. So you've had a lot of experience in this
Right.
field.
Mm-hmm.
All right. So now we're going to get into the meat of our program today. And that is, we have been spending a lot of time talking about loan modifications. Our program, Does My Bank Still Love Me, is for the distressed homeowner. And so we've been talking loan modifications, short sales, deed in lieus, and of course foreclosures. And now we're going to talk to you about refinancing. And I want to know, what exactly is the difference between a modification, a loan modification that is, versus a refinancing?
Okay, so a refinancing is a new transaction. It's essentially a complete payoff to the existing lender or mortgage servicer. Typically you have a new loan balance. You're basically starting over. You're starting over the amortization term, your principal balance changes, and more than likely your payment itself changes also. A modification is just that. It's a modification to the existing mortgage contract on your property.
Okay. And so if a homeowner is in trouble, is a refinancing something that is actually an option available to that person?
Most often, no.
Okay.
Typically, when you have a client who is in distress, they're not going to qualify for a conventional or government type of refinance program, because most of the time homeowners in distress may or may not have missed a mortgage payment, and that is a requirement that you do have a good mortgage history for at least 12 months.
Okay, so we have somebody out in our viewing audience who has pretty good credit, hasn't missed any payments yet, and is still a candidate to have a refinancing. Is this a good time to do a refinancing?
Absolutely. If they have good credit, they have stable income, they have a good debt-to-income ratio, and they have equity in their property, it's a fantastic time. Rates right now are in the low 4%, so they're historically the lowest that they've ever been. The problem is, unfortunately, is that the way that loans are based on is those factors, and equity position is a major one. So if you don't have any equity in your property, or very limited equity, the interest rates that you would be able to qualify for are adjusted based on those risk factors.
So the 4% then is going to be available only to people that have the best credit, the stable income, and equity in their homes.
At least 20%.
Okay, at least 20%. And so if you don't have any of those things, you're not going to get the 4%. You'll get something else higher than that.
Correct. Yep.
Okay, all right. So what kind of a credit score would you just generally have to be able to get any kind of a refi?
Well, it depends on the loan program. So for a conventional mortgage, the lowest credit score typically, and again, you have to have a very good equity position, would be about a 640. And again, they're going to be rating you on your credit score. So you're not going to qualify for the lowest rates,
Okay.
but you're going to be able to get a loan because you have equity position on your home. So in that point, the bank's evaluating the collateral and their risk factor,
Okay.
not necessarily as much your credit. An FHA loan goes down to as low as a 620, and it allows you to have only 3% equity in your home.
Oh.
Yep,
Oh.
3%. So you can
And that's
actually.
a FHA,
Yep.
Federal Housing Authority.
Yep. So
Okay.
FHA allows you to finance up to 97%. I'm sorry.
Wow.
Of the value of your home. Now VA loans are a little bit different, and they're not credit score driven as much. So there's some options there, and there are a few other programs. One is a rural housing loan. So it's specific for properties that are in the rural area, and those allow 100% financing.
Oh my gosh, now I wasn't aware of that. And VA, of course, is the Veterans Administration, and
Correct.
those kind of loans would be strictly for vets. We are going to need to take a break for just a moment, but we will be back with Rachel afterwards, so please don't go away.